While housing finance companies have seen robust growth in their AUM in last 3 years, there has been a huge differentiation between the men and the boys. HDFC Limited has seen robust AUM growth. So the impact from COVID, all those who had seen robust momentum and growing faster than the system growth rate till FY17 and 18 bore the brunt of fast rundown of their books. Hence, clearly there has been a huge differentiation between the quality amongst lenders. Not to forget that some of the small sized companies have done robustly well, like Aptus Value Housing, which has seen its loan book double in last 3 years. Home First Finance also has doubled its loan book in last 3 years, and Awas Finance has seen a growth of around 82% in their AUM in last 3 years. Indiabulls Housing Finance as well as PNB Housing Finance, they have seen their AUM decline in last 3 years. So Indiabulls book has actually declined by around 27%, while PNB Housing Finance book has declined by a little more than 20%. Incrementally, the growth of HDFC Limited in last 3 years is 2x the entire listed HFC sector in terms of value-wise AUM growth. Net interest income growth was around 18% YOY and about 7.6% quarter-on-quarter. This growth was led by strong growth seen in LIC Housing Finance, HDFC Limited, Home First Finance and Awas Finance. The only company to see a decline both YOY and quarter-on-quarter in NII was Indiabulls Housing Finance, while sequentially the NII declined for PNB Housing. Operating profit growth was at 15.3% YOY and around 10.7% sequentially. Strong operating profit growth was seen for LIC Housing Finance, HDFC Limited, Awas Finance and Home First Finance. PNB Housing Finance operating profit declined both YOY and quarter-on-quarter, while Indiabulls operating profit actually declined on a sequential basis. Net profit for the HFCs grew by 17.4% YOY and about 28% quarter-on-quarter. HDFC Limited led the growth this time around with nearly about 20% quarter-on-quarter growth in terms of profits. LIC Housing Finance profit growth was seasonal in nature, while Awas Fin and Canfin showed good growth on a sequential base in terms of their earnings. AUM growth was a bit on the lower side for the companies, growing at around 10% YOY and 3.5% sequentially. Take the loan growth with a pinch of salt, as tenure has increased for the loans with lower repayment in EMI and higher repayment in interest in the EMI mix. Asset quality has improved, with gross NPA being down 19.7% YOY and 13.5% sequentially. Declining gross NPA was led by HDFC Limited, which saw its gross NPA decline by 30.4% YOY and about 18.25% on a sequential basis. PNB Housing also saw improvement in its asset quality as well. Gross NPA is the lowest for Canfin Homes and Awas Finance, while it is the highest for LIC Housing Finance and PNB Housing Finance, reflected in their valuations as well. So HFCs in Q4 FY23 saw NII growth of 7.55% quarter-on-quarter, operating profit growth of 10.7% quarter-on-quarter, while the PAT growth was robust at around 28% quarter-on-quarter. Net interest margin will improve for HFCs with repricing of their loans in terms of aiding their yield going ahead. So HFCs have battled the liquidity conditions really well, and high cost of funds challenge has also been taken care of. So outlook remains good for the sector, and its return ratios can improve from current levels.